This is Cece. Welcome to The Orbit. It is Monday, July 22nd. We've got stocks higher to begin the week. That follows a couple of ugly days to close last week where we saw stocks lower, sort of in unison for the first time in a while. We didn't see that as much, the divergence between the different indices, between small caps, mega caps, things like that. Everything was kind of selling off into the end of last week. We've got a rebound to start this week. We are up about 0.9% in the SPX. That is not far away from what the expected move was for the entire week, which was about 1.25%. We've got, with that sell-off into the end of last week, sort of the convergence of some of the movement in the major indices. We did see a pop in volatility last week. And we see the VIX down a little bit today, but not too much. We're still above 15 in the VIX, which isn't historically high, but it is well above some of those low VIX readings we have gotten accustomed to over the last couple of months, down near 12 or 13. So vol is a little bit higher. It affects short duration, of course. Today we've got about 22 vol, about a 0.4% expected move for the rest of the day, and going out to the end of the week we see about a 1.1% expected move. This is about an hour into the trading day on Monday, an hour and a half, about 14 IV, which is a couple of points higher than we've been seeing recently. We've even seen short duration vol in the single digits over the last couple of months at times. So 14 is higher, and that is producing expected moves that are a little bit larger than what we've gotten used to lately. As far as an iron condor for the rest of the week, you can see the levels. Let's go in here and let's pick Friday. And the levels there, we've got about 56.20 on the upside on the short call, and we've got 54.95 to the downside on the short put. So that is taking you slightly above that 5,600 level and slightly below that 5,500 level. This is a week that has some earnings. We've got Spotify and Alphabet and Tesla on Tuesday. You've got Chipotle later in the week. And then next week, we see some of these other mega cap tech companies report. There will be some individual stock movement pretty much every morning and every afternoon, apart from the industries. And obviously, once you get into the mega cap reports, like Tesla and like Alphabet, that could be index moving as well. For the day, let's go in and let's select today's expiry, a short put level of 55.35 and a short call level of 55.75 at the expected move. That is just over 20 points in either direction. If you take this a little bit wider, create a little bit more space, not even getting down to Friday's lows to the downside. About that 4-to-1 risk reward ratio, we see the 55.25 and the 55.85 as the short strikes. Checking in on the Qs, up even higher than the SPX, about 1.4%. The expected move for the rest of the week in the Qs, and again, some big components reporting here with Tesla and Alphabet, etc. About almost a 2% expected move in Qs for the week. IWM, are we seeing a little bit of divergence today? A little bit, in that IWM isn't up as much as the other indices, so up about 0.4% today, as opposed to the Qs, which are up 3x that move. As far as overall volatility, a lot will be dependent on this rally holding today. If this were to fail today, you could expect to see some pops in vol. Obviously, that 5,500 level is extremely important. If we get down below that level, you might see an increase in volatility. Going back to the monthly chart in SPX, you can see where we are. The 3-month chart is even more helpful to get a sense of where we are overall. It's about a 3% pullback we saw in SPX. It was much more significant in the Qs, which got down about 7% from their very recent highs. And so that was a pretty strong move in the Qs last week to the downside. Obviously, there's components that everybody's watching, particularly the chip makers. Let's go into NVDA, see what that's doing on the day. It's a pretty strong bounce today, and that is helping the market. That is helping the Qs higher. where we are in NVIDIA overall, you can see that correction was pretty steep at about, at its lows, was probably in the high teens, about 17-18% pullback from the highs. Going out to the 1 year chart, this pullback has been very similar to what we saw back in the spring that saw about a 17 or 18% pullback. We've got, zooming back in on NVIDIA, we've got this sort of lower high that we just made, not quite a double top perfectly, but you can see that lower high. So obviously what happens next, as we are right down at this prior pullback level, just going back into June, not very long ago, about a month ago. Obviously very important for NVIDIA to hold this level, and if it does not, you could see some more downside. We've talked about the way, if you are in a stock like this, to protect potential gains. Perhaps you do that on a bounce in NVIDIA, but putting on a put spread down to a 20%, 25%, even 30% move from the highs allows you to have that ammo if you wanted to buy more in NVIDIA or a stock like that. Picking levels, doing a put spread down to a level where you want to be a buyer allows you to actually act on that if you do get that kind of move. A lot of people get that move that they said they would love to buy a stock like NVIDIA in. They get that move and then they are no longer buyers because everything feels so bearish. But that is the times when you actually do want to buy low rather than buying high, and options can help you do that. The same thing is true for if some of these stocks get so beaten up, looking to call spreads to the upside out over a couple of months. Volatility is higher than it has been, but it is not super historically high because the overall market vol isn't historically high.